Good morning, good afternoon to everyone joining us from different parts of our beautiful world. Welcome to this particular webinar. Today, we'll be exploring a critical question for every agribusiness. And the question is, why do you need a solid business plan as an entrepreneur? Whether you're just starting out or looking to scale, we are going to unpack the value of a business plan and how it can strengthen decision-making, attract partners to your business, attract investors, and drive the growth of your agribusiness. This webinar is divided into 6 key segments. First, introduction, where we'll briefly introduce Colleague, who are our partners today, explain who they are and what they do. We'll also share in this particular segment the objectives of today's webinar. In the second segment, we'll take a look at why your agribusiness needs to have not only a business plan, but a bankable business plan. In the third segment, we are going to learn about what a bankable business plan really looks like. In the fourth segment, we are going to look at good practices to adopt and challenges to overcome when producing your business plan. In the summary and next steps, we look at key takeaways from today's webinar and the next step to take after you are learning today. And lastly, we are going to conclude with the Q&A segment where we are going to answer your questions live that have come from this particular webinar or that you've normally had concerning how to produce and how to work with a business plan. To start us off, I would like to invite Waiting from Khalid to briefly introduce Khalid and to also share the purpose of today's webinar. Welcome on board, Waiting.
Thank you very much, Harry, for the introduction. And hello, everyone. Welcome you again to this Khalid's Access to Finance webinar. For those who's not very familiar with Khalid, the organization, we're a not-for-profit private sector association with around 50 years supporting a history of supporting the horticulture and agriculture sector in ACP countries. Not only for MSMEs, but also for other value chain players in the agriculture sector. And we are a team of around like 80 people across 4 different offices in France, Belgium, Kenya, and Togo, with around 20 years implementing development programs sponsored by our donors, such as the Commission, such as the EU Commission, like the French development agencies, etc. And our mission is to facilitate and implement all the actions that allow us directly or indirectly and to increase the contribution of the agriculture sector and particularly the horticulture sector to the achievement of UN SDGs. And we always claim ourselves as a toolbox and a network. And as a network, we are a network of over 500 members from around 50 countries, from private to public sector, from producers to competent authorities. And as a toolbox, we have been developing training materials, different tools that would benefit the agricultural value chain from the production, processing to the marketing. And we cover all the different topics of importance for the agriculture sector, for the agri value chain players, just like you. And today, we're particularly going to focus on access to finance. And for all of us who are here today, we all know that access to finance has been an enormous challenge for the agriculture sector. And that is why Khalid has been supporting MSMEs in the quest for their external funding. As you know, you need to be investment ready in order to successfully secure external funding. And to become investment ready, you have to kind of tick different boxes, from validating your business model, from having a robust business plan to having a strong financial plan. And then by then you can finally start to identify a list of source of funding and try to engage with them. And not everyone has the same maturity level and not everyone's been in the same stage. And that's why, in order to help our partner beneficiaries to tick those boxes and be very confident in front of external potential funders, and we have developed different type of training materials. So a series of training materials along what we call investment readiness path. So to start with, we have the different blocks from webinars to self-study course to collective training on 4 different topics. as you can see on this slide, the 4 different steps that we have designed. And today's webinar is particularly about step 1, so business plan support, and why your agribusiness needs a business plan. And this is particularly for companies who have already had a valid business model. You've been making profit for around at least a year, and you would like to work on improving your business plan to potential reach the potential growth, or have some further development of your business, or have some other project that you would like to acquire for external funding. And for those who doesn't have a valid business model yet, the good news is that we have just launched the self-study course on Introduction to Business Model Validation in Agriculture Sector, which would help you reach the point. And for this, my colleagues would also drop the link of this training in the chat so that everyone could access. Without further ado, I'm going to give the floor back to our local expert, Harrison, to continue this very important topic. All right, Harry, the floor is yours.
Thank you so much, Weting, for that great introduction. I'm Harrison Odongo, the head of business development services at AfriScope. For the past 10 years, I've been supporting agri-SMEs in East Africa through business development, capacity building, and fundraising. My work focuses on developing and implementing business strategies, creating market linkages, and most importantly, securing funding to help agribusinesses to grow. I'll be guiding us through the remaining segments of the webinar. Let's get started. Since we have concluded the introduction section, let's review our agenda to ensure we are going to cover all the critical points we're supposed to learn today in a very efficient manner. Our session today is structured as follows. First, we are going to discuss why a business plan is essential to the agribusiness that you are running. Next, we'll explore the components of a bankable business plan. This is going to be followed by best practices and common challenges that you're likely to incur when you're producing your bankable business plan. We'll then conclude with a summary and next steps and resources for leaders to offer as a follow-on from this particular webinar today. Now that you know what to expect in this webinar, let's dive into our first topic. We'll begin by asking ourselves a very fundamental question. As an agripreneur, why do you need a business plan? People normally say you need to have a business plan, but the key question today is, why do you think this particular document is important? Why do people insist that you need to have a business plan? To respond to this, we are going to explore the role a business plan plays in guiding the day-to-day running of your enterprise, as well as its importance in helping you to secure funding for the agricultural project that you're currently running. We'll then conclude this particular segment with a real-world success story from a business that benefited from having a bankable business plan. So, as someone who spends much of his time addressing challenges faced by agri-SMEs, I'm often saddened by how many agri-SMEs operate without a bankable business plan. Yet this is a crucial tool for every agribusiness. Let's take a moment to explore why having a business plan is not just useful, but essential for you to successfully run your enterprise. First, a business plan helps align your team on a shared roadmap. Think of it like, for example, like your farm calendar. If all your employees know when they are supposed to plant, they are aware of when they're supposed to weed, and they're also aware of when the harvest is supposed to take place, then the whole team is going to work in unison. This team is going to work in sync. A business plan will do the same for your business by making sure that everyone understands not only the mission of your business, the goals that you want to achieve, but they also know exactly what they need to do together so that you get to achieve the mission that you stated for yourself and the goals that you want your business to achieve at any particular point. Secondly, a business plan will help you set very clear goals and milestones. For example, you might be setting a target to produce 10 tons of tomatoes this particular season. This target becomes a milestone that you can measure against your actual harvest. With a business plan, you will be able to track performance against your business target because you already said in a plan that we are planning to do maybe 10 tons of tomatoes this particular season. And when you actually do the harvest, you're going to compare the yield you got from the farm. If at all you and your team were able to meet what you are ensuring to project, you are projected to meet in the first place. Thirdly, a business plan will demonstrate viability. With a solid business plan, it will not just say that you as an agripreneur, you want to grow tomatoes. The business plan will show that you already have the land where you're going to grow the tomatoes. You already know where you're going to source quality and affordable inputs. You already have a market where you're going to sell the tomatoes when they are ready. And you have a plan to make the new tomato venture profitable. This therefore proves that your idea can not only sustain itself, but will also succeed in the long term. So these are some of the fundamental reasons why you as an agripreneur need to ensure that you have a bankable business plan. So apart from the day-to-day operations, because what we are looking at were basically why you need to have a business plan for your day-to-day operations. A bankable business plan is also a very vital tool for fundraising. Trust me, even I'm saying this because I normally do a lot of fundraising for agri-SMEs within the East Africa region. And one of the critical tools that we start with when we want to raise money for you is looking at whether you have a business plan. So when you are seeking funding, your business plan becomes more than just a roadmap, as we've seen. It is your investment case. It is what is going to convince the funders that you are approaching whether whether they can back you or not. So if the business plan is good, definitely it will convince the funders to bank on you and fund you. So how does a business plan achieve this? First, a bankable business plan will help build your credibility as an enterprise to the funder that you have approached. For example, if your team has got years of experience in, for instance, vegetable farming, and you present a bankable business plan, that plan is definitely going to highlight the expertise that your team have that your team already has, and it's going to show the targeted funder that they're dealing with people who actually know what they're doing. Secondly, a bankable business plan will show a clear path to returns, which is integral for accessing funding. If you are looking for money, maybe for example a loan to finance a greenhouse, your business plan through its forecast in the financial chapter will show how yields are going to grow from, let's say, the current 5 tons you are doing to 20 tons of tomatoes, if at all you get this particular funding. And this can easily be translated into the profit the business is going to make and give the investor confidence that if I actually give this particular entrepreneur or enterprise the money they are seeking, I'll be able to get paid back if at all this is a loan. And if at all you are seeking impact equity investment, the equity investor will definitely see that I'm going to get something from my money here at the end of the day. Thirdly, a bankable business plan will prove to the funders that the market opportunity your enterprise is exploiting is actually there, assuring investors that the demand exists and that your agribusiness can actually be profitable. Business plan has got a whole chapter dedicated to the market. Now we are going to show this particular investor that this opportunity I'm backing, I want to grow tomatoes. Is there really a real existing market where the tomatoes I want to produce are going to be consumed? Lastly, a bankable business plan will demonstrate to the funders your level of risk preparedness. As you know, we are in agribusiness, and farming comes with some form of risk. For instance, drought, things like pest, and also price fluctuations. A good plan will explain how you are going to manage this particular risk, that reassuring the funder that their investment is in you is going to be safe. Because if I'm a funder and I find a business plan and you're going to do tomatoes, and you really acknowledge that in tomato farming, prices can fluctuate, but how am I going to mitigate these particular price fluctuations? Maybe I'm going to, for instance, target both local and external markets to basically cancel off the net of the effect of price fluctuations. As a funder, I'm going to feel reassured, and I'll be assured to bank on you. So just from what we've seen, we see that a business plan gives investors the confidence that you have the expertise, that you have the market, that you have the numbers and the strategies to succeed, and they should therefore support you financially. Now that we've seen how a business plan will position you for funding, let's take a closer look at what exactly the investors are looking for when they open your plan, especially when you're presenting this particular plan for funding. First, when an investor reads your business plan, 3 critical questions immediately come to their mind. And these things are true because even for us as AfriScope, we normally assess business plans for various SMEs to decide whether or not they are receiving the funding they are seeking. So when we go through those particular business plans, we normally look at them through the following 3 lenses. The first question is, can the investor trust you and your team? Here, your plan must build credibility. For example, you should highlight the years of experience in horticulture that you and your team have to reassure the funder that you really know what you are doing. The second question that comes to mind is the opportunity that you are chasing real? Is it really existing? Is it there? Here, your plan must communicate viability. This means that you need to use market data to show that the venture that you are going to get into, the idea is actually going to be profitable. And then The third fundamental question that normally comes to mind is how will the investor get their money back? This is where your financial projections now come into play. If your plan shows that the greenhouse loan you are seeking is going to boost your yield from 5 to 10 to 20 tons, then it becomes clear how these particular extra sales are going to translate into returns, which will enable you, number one, to either repay the loan facility that you have been advanced or to pay dividends to the equity partners that are going to come into and join you into your business. So we've seen the importance of a business plan in running your business in the day-to-day operations, and also look at the importance of this particular crucial document in terms of fundraising. Let's take a few minutes to look at a real-world success story of an enterprise that benefited from having a bankable business plan. So this enterprise was founded in 2021. It's called Kami Valley. It's a Kenyan business that specializes in export of fresh herbs. The company needed to build additional greenhouses. It needed to also upgrade its grading and cold storage facility, and also to complete its international certification processes so that it's able to access even newer export markets. In order to raise the required capital, the directors began by updating their business plan, because this is an enterprise that was working closely with Khalid. This exercise proved really invaluable as it helped the company to refine its overall strategy, because when you're doing a business plan, you're looking at what are we doing? When you're building the new business plan, they looked at what are we currently doing? Is there a need to pivot in any way? So they came up with an overall new good business strategy. It also helped them, that exercise helped them to identify gaps, such as the need to hire a new accountant, because they didn't even know that they needed an accountant. But through that, writing a new business plan, they realized that there's a gap in our in our personnel. We needed to have a new accountant. It also helped them determine the actual funding amount that they required. So instead of the 70,000 euros that they were seeking, that they thought they wanted initially, the revised plan showed that they only needed 27,000 euros. So with a clear and bankable plan that outlined the specific use of funds, Kami Valley was able to secure a zero interest loan of 14,000 euros from an impact investor, simply because they had what we are calling a bankable business plan. So from this particular real life situation, we are seeing that a strong business plan helped the company to not only refine its strategy, but to also approach the right partners and successfully eventually secure the funding that they were seeking. And to add a cherry on top of this, the funding that they were seeking, they even got it at 0% interest, which I think most of us normally yearn for. So this really shows you how powerful having a bankable business plan is to your business, and how it can really help steer you towards the right direction. Now that you appreciate both the operational and the funding capabilities of a bankable business plan, in this segment, we are going to look at the various sections your business plan needs to have in order to be considered bankable. Because we've been talking about you having a bankable business plan. Then what are these things that particular business plan needs to have for it to be considered really bankable? So a bankable plan for me is more than just a document. It is your story packaged in a way that is going to convince stakeholders to trust and invest in your agribusiness. A bankable business plan is built around four key sections. The first one is the company description and management team section. Here, as an agripreneur, you need to share your vision and introduce the people driving that particular agenda. If you're running a mango export business, for instance, investors want to know if your team has the right skills and they have the right experience to deliver the vision that they are seeing in your business plan. This is going to help build the credibility and answer to them the question whether they can trust you. So the investor reading your plan need to know whether they can trust your business. And they're going to get this if they're going to know this if they see your vision and they can match it to the expertise that your team already has. The second section is the opportunity. This is where your plan proves that there is a real market to serve. For instance, you might show how rising demand for organic avocados in Europe has created a space for your farm's produce, maybe from Ghana. So through your product description and market analysis segments of your business plan, you clearly show that you are solving a real problem or filling an actual gap that is existing in the market. Now that you've confirmed that there's a real opportunity, the third segment of a business plan, a bankable business plan that is the execution plan. This is where now there's a bold strategy that explains how you are going to seize the opportunity that you've already identified in section 2 of that particular business plan. It is going to show what you're going to do differently to cash in on that particular opportunity identified. For instance, maybe leveraging strong market channels to get your produce to both local and export buyers. So this section of the business plan is going to answer to funders the question whether how will you as a business deliver the opportunity that you already identified. And finally, the financials and risk management section. Here, you present realistic projections on your revenues, you present numbers on the profit, you present your cash flow for the agribusiness, and the cash flow that the business is basically likely to generate. For example, if you expect returns from chili, you expect to get returns from chili farm that you are running, you need to highlight risks such as, for example, pests and price fluctuations, along with mitigation strategies that you are going to put in place so that you give confidence to the funder that you understand the rewards and also the realities of the play of the space in which you're operating in. And lastly, we have the appendix. So here is basically where you provide supporting documents that strengthen the business plan, but are also too detailed to include in the main section of the business plan. For instance, things like now market research data, the photos of your product, maybe certifications that you have, the CVs of your team, etc. So the appendix should be well organized and referenced in the main body of the plan to guide readers to the relevant details when they need to have it. So this was just a teaser on the sections of a bankable business plan. I'd like to invite you to go and check out Collid's resources from its e-learning platform, where we looked at each sections in a detailed manner to ensure going forward, you do not only have a business plan, but you have a bankable business plan for your agribusiness. So after now learning the sections of a business plan, in this fourth segment of the webinar, we are going to cover best practices to enhance your business plan and the common challenges that can really undermine the efficacy of the business plan that you have as an agripreneur. Let's start with four key practices that are going to elevate the quality of your business plan. First, be specific and data-driven even as you produce your business plan. Use market research and performance and past performance data to back up the strategy that you're putting forth for that particular business plan. For instance, if you're producing green beans, show export demand trends and your past sales data to demonstrate credibility. Secondly, justify every funding request, because I know for one of the major reasons why we produce a business plan, among other reasons, is to get funding. So do not just ask for money. Connect this particular amount of money you're asking in your plan, connect it to growth. For example, if you're seeking financing for irrigation systems, show how they will double tomato, how you're going to double tomato harvest should you get this particular irrigation system that you are seeking. Thirdly, address risk openly. Every agribusiness faces risk from pest to market price swings. Be upfront and present mitigation strategies such as crop insurance or diversifying into both local and export market. This will show that you've really thought ahead, even as you're looking for funding. Finally, write with clarity and professionalism. Keep your plan concise, structured, and free of unnecessary jargons. For instance, instead of vague phrases in your plan like maybe I'm going to expand operations, state directly how your plan is going to increase your avocado export by, say, 20% within 2 seasons. Also, it's important to remember here to make your executive summary captivating and loaded with key information, as it acts as a teaser that will determine whether a potential funder becomes interested enough to continue reading your business plan. Basically, the executive summary is the soul through which external funders look and decide whether or not they're going to read the remaining 30 pages of your business plan. So you need to really work on it and make it really captivating. On the other side, let's look at some mistakes that you should avoid in your business plan. Make sure you have in your business to ensure that you really have a strong business plan, not only for your operations, but also for potential funder. First, avoid being vague. Avoid vague strategies that are not supported by data. For a funder, a plan that lacks data support, like claiming, for example, high tomato yields without showing soil test results or even showing market trends, will only signal to the funder that you are really unprepared to use the resources they're seeking from them in a very effective manner. Secondly, your plan should match the reality. For funders, poorly researched opportunities, like for instance, targeting a saturated market without data to back up that the decision to go to that particular market, is going to cast doubt on your entire plan's credibility. Thirdly, avoid being overly ambitious in your projections. For a funder, unrealistic numbers, for instance, like say you're projecting $10 million from a small chili farm in only one season, will suggest a high level of dishonesty or market ignorance, which eventually is going to scare off the funders that you are targeting. Also, avoid failing to mention a potential risk. From a funder's perspective, if you fail to mention risk, this becomes a very big red flag to them. They will think you've either not done your homework well, or you are not just being honest, all which will going to reduce their appetite to invest in you. Lastly, failing to justify the amount requested. From a funder's perspective, absent use of funds will signal a very big risk of fund diversion, which will eventually reduce their appetite of investing in you as an agripreneur. This, therefore, are some of the mistakes we should endeavor to avoid even as we produce our business plans. So, having successfully looked at good practices and challenges to avoid in writing a bankable business plan, let's look at the last sequence of today's webinar, which is the summary and next steps. In this segment, we are going to look at key takeaways from the webinar and the next steps we are going to follow after this particular webinar here today. As we conclude, I want us to circle back and look at what has been presented here today. As a business owner, take a step back and look at the business plan that you have for your agribusiness and ask yourself the following question. First, does that business plan properly bring out your credibility? Does the business plan you have for that particular agribusiness that you're running, does it bring out your credibility? Secondly, does it show whether the opportunity you are exploring is viable? And most importantly, does it have the numbers to show investors, including yourself, because you're also investing in that particular business, that they'll get their money back from investing? Even as you ponder on those questions, I'd like to invite Wei Ting back to take us through the closing segments of this particular webinar. Welcome, Wei Ting.
All right. Thanks a lot, Harry, for those very important questions, and that really matter to all the agripreneurs who like to grow their business and develop it. If today's webinar has sparked your interest in learning how to create a solid business plan for your agribusiness, we invite you to continue your learning journey with us. Co-Lead offers different levels of support to match your needs and experience. We have self-study course that open to all, where you can learn the theory at your own pace. And we also have the collective training where you practice with your cohort and gain some real practical skills. And last, we also offer post-training support where experienced experts will work with you directly and to adapt and finalize your business plan for your own company. So this way, you don't just end with ideas, but rather you finish with a business plan that is ready to use and to present to potential founders or partners. And if you move on to the next slides, we have gathered some few words. As you can see from the word cloud, we have gathered some feedback from our previous learners, participants from our training, from other agripreneurs just like you. They found this training very rewarding and quite specific and simple to follow, and quite flexible in terms of timing and the pace. And lastly, also very encouraging to follow. It shows not only the quality of the training, but also shows that having a proper business plan is more than just working on its theory, but rather, having it as paperwork, having it as a living document. It is a tool that opens the door for your company growth. And once again, we invite you to explore those materials and take the next steps in building your own strong business plan. Thanks a lot for everyone's participation, and thanks a lot for Harry for this, for moderating the webinar. And we're going to move on to the Q&A session now. Don't hesitate to write down your questions in the Q&A box. And I've seen there are also some questions in the chat. For all the trainings, we are developing them in French in the coming months as well, including this webinar. And for the existing materials, we have them both in English and French already. Don't hesitate to check online. Indeed, all the presentation slides and the recording will be shared in the follow-up email next week. And for Harry, I think we can quickly talk about the question regarding the market analysis that we have received previously.
Yes, thank you so much, Wei Ting. So Thank you so much. There is a question that we received from the participant. One was asking whether they take too much time to come up with the market analysis market analysis segment of the business plan. If there is a shortcut they can follow in order to basically reduce the time that they are spending to come up with that particular information. So I think my answer to that would be really easy. Thank God we are in the era of technology. You can leverage the use of artificial intelligence, AI, to basically get the information that you are seeking. But there's a very big caveat. You need to ensure that at least the information that the AI is going to give to you, you're going to double check it for soundness and for accuracy, because not all information coming from artificial intelligence is accurate. So this is at least going to reduce the time you spend getting that information by maybe 50%. So yeah, there's a way to do that. There's also a question that we received during the sign up that is asking whether a business plan is a living document. And my answer is a very big yes. A business plan is a living document. You need to continue updating it to add to the current strategies that you are pivoting into your business that you're currently implementing, and also just update the numbers, because maybe your management account last month are not the same as the new management account. So yes, a business plan is a living document that you need to keep on updating. There is another question that was here.
Yes, maybe. Harrison,
yes.
One comment as well. So this is Brice. I'm the manager of the Access to Finance department at Colid. I was glad to follow the webinar, and maybe one comment to the question on the market analysis. What we often see in the business plans that we receive from companies we support in accessing funding is that they do have a long market analysis, but that is still very theoretical. So my advice to all entrepreneurs that are willing to access funding is to make this part maybe shorter, but very concrete and very applicable to your specific opportunity. For example, if you're selling mangoes in Kenya, we're not so much interested about the total amount of mangoes that are sold in Kenya and your estimation about how much of that market you can capture in theory. We're much more interested to know what you have already captured, and based on this, how you can grow your current market share. But theoretical numbers are just good to have a short idea, but don't overspend time on this. And the goal is not to understand or to share your understanding of the overall market. The goal is to convince that you're able to sell what you intend to produce. I'm mentioning it because that's something we very often see, that entrepreneurs take a lot of space in their business plan and a lot of time to produce it, but that's not the most valuable use of their time, I would say. Arisen, I don't know if you would agree with this.
Yeah, definitely. I would agree with you, Brace, because you find somebody does like 3 or 4 pages of market analysis and it's only comparing. They are in Kenya and they're telling you about, they start with mango in East Africa, and then they narrow down to in Kenya, and then they narrow down to where they are. So you just read 2 pages of unnecessary information before you get down to what they're trying to say. Yeah, I agree with you.
Oh.
Yes, waiting. Do you have any other question?
I think for now, we haven't seen others. A question just coming in. What is your advice to a startup business that has no historical data, but they need to show or demonstrate financial projections in the business plan? Thanks, James, for posing this question. Harry, I'll let you share a few words.
Yes, thank you, James, for this particular question, because this is a startup, but when the reason why we are calling them projections, because this is what you're projecting to get. When you are starting a business, you already had an idea of the level of market demand that is existing for that particular opportunity you want to exploit, and you're already convinced that that opportunity is viable. The viability is already, you already know, you convince yourself that the viability is there. So you, in the financial part, you are going, because you don't have historical numbers, you are going to just show us projections. But there's a very big caveat here, as I said before. Ensure those projections are not overly ambitious. They are actually realistic in nature. Yeah.
Thanks, Harry, for answering the question. I hope it answers to you, like James. And if there's anything I would like to add on this, is that it's very important to have a very realistic projection. It's you have to have very realistic assumptions about the different calculations that you're going to have like the calculation, the numbers that will be shown in your financial projections in different documents. For this, we have a very extensive training in our introduction to financial plan, which has been launched in English and which will be launched in French very soon. So I hope that would be further help for your agribusiness. All right, I think we're gonna close here, and thanks again for everyone for participating, and thanks for Harry for everyone from After School for connecting in. Also, thanks for everyone from Colleague who's joining in today, and all the work has been done to prepare this webinar. I hope you have enjoyed this webinar, and don't hesitate to reach out to Colleague team, our Access to Finance team, if you have any questions, and you can expect the slides, the recording to be sent in a follow-up email in the coming days. I wish you a wonderful afternoon, and thanks again for joining, everyone.
Thank you. Bye-bye. Thank you.